All right. So first off, what's your name and what got you started into mortgage?
Yeah, so my name's Matt Reiner. I'm with Premier Mortgage Resources. I got into real estate and title late 97, early 98. I was a courier. I delivered title policies back then. So I got into lending in 2003 is when I started my lending career. So about 21 years ago. Worked for several different companies and for me.
Nice. Now, can you explain more about that program?
Yeah, so the way it works is if we have somebody that doesn't qualify for traditional financing, so maybe they're 6 months out of a bankruptcy, that's one we recently closed. Maybe they're newly self-employed or just moved from hourly to commission. Those are the kinds of things that you need a 2-year history of. Maybe rental income. Maybe you started Airbnb a couple of rentals. You need a 2-year history for that typically. So if there's hard to prove income, cash tips, or even self-employment, sometimes they have a lot of write-offs. Most of your self-employed borrowers would, maybe they show $250,000 in gross receipts or gross sales, and then their taxable income's like 75 grand. So they're thinking they're making 20 grand a month when they're making maybe 6 or 7. So the program that we created, Homebuyer Ally, it helps those people get into a house now before prices go up. To me, that's kind of the spirit of the program. So if you had to wait 2 years to get out of your bankruptcy waiting period, if you had to wait 2 years to, get your self-employment income up, how much more is that house going to cost you in 2 years, especially right now, right? So if you could get a house for 400 grand a day, if you had to wait 2 or 3 years, it's not going to be 400 grand in 3 years. At least we don't think so. Most experts don't think so, right? Kind of think prices are going to keep going up because inventory is low. So we have HUD entities that will go out and purchase the home, and then they enter into a home buyer agreement with the participant. So the participant gets up to 10 years. Home buyer agreement's going to be recorded on title. They're not going to be the owner of record. It'll be the HUD entity.
Sure.
But get up to 10 years to fix whatever they need to fix to do traditional financing and buy the house. But it is allowing a lot of people the opportunity to start building equity in a home. So when they do go to buy that home, they buy for whatever's owed on the loan.
Okay. So you're saying basically they lease it, but when they sign that contract, they're locking in that buy price.
They're locking in they're locking in the price. So they can make improvements to the house. If it's going to be structural, we're going to ask them to run that by the HUD entity. They need to talk to the investor and show them the plans. But if they want to paint, if they want to change carpet, it's their house for all intents and purposes.
Yeah, no, it sounds like it gives somebody that's, not able to go through the conventional ways of getting a loan.
Yeah.
That opportunity to at least be a homeowner.
At least to start building towards something, right? That's the idea.
Now, is there a difference between a mortgage broker and just a traditional mortgage lender?
Yeah, so there's really 3 types. You could look at your depository institutions, your credit unions and your banks. They do mortgage. Then there's mortgage bankers or, correspondent lenders. Those are mortgage companies. So we're not a depository institution. You can't open checking or savings. Mortgage is all we do. And Premier Mortgage, we do everything from beginning to end. So we'll underwrite the loans, we'll fund them, we'll service loans as well. We can sell the servicing or we can keep the servicing in-house. And then there's mortgage brokers. So broker is kind of a third-party mortgage guy. They're going to take your paperwork and process that loan. They're going to look for different institutions to underwrite it and to close it. So brokers aren't using their own money. They're going to use somebody else's money. They're going to go to another institution and say, hey, I got a deal. What do you think? There's pros and cons to all 3 of those outlets. I've stayed in my world because my business is service oriented. One shot at the right house. It's not like buying a car. You go to one Toyota dealership, they don't want to work with you. You can go to another one. You get the exact same Toyota, exact same color, exact same package. You can go to Seattle, you could go to Portland, you could fly somewhere else and drive it back. Houses don't work that way. You find that one house, especially if you're married, fellas, if you're married and your wife really likes that house, like you need to put your best foot forward to be sure you get the house.
Right.
That's where service becomes important.
Sure. So what are the top things first-time home buyers should know before applying for a mortgage?
I think they want to know about the first-time buyer programs. That would be a good start. Maybe look at some of your local nonprofits, get some education, or even some of the state first-time buyer programs. Now, your first-time buyer programs are mostly going to be income controlled, which means you're only going to be allowed to make a certain amount of income every year. And some of them are even household income. So it's not just going to be, say, you on the loan. If you have grown kids that live with you and make money, the state, for example, the Washington State Housing Finance Commission, some of their programs will count household income. So kind of important to work with somebody that understands those programs and knows them. So you get the full picture and you know what's available to you. So I think the first step is to get pre-qualified, is to know how much you can afford. Step number 2 is to get a real estate agent, but also to look at the neighborhoods. I think that's something that people don't do enough. We used to tell people in our first-time buyer classes, like, okay, you like this house, drive by here like 20 times this week. Drive by at 8 o'clock at night, drive by at 10 o'clock at night, drive by at 8 o'clock in the morning, not curb appraise so much, but go through the neighborhood and just see it at different times. Maybe there's a train right back there that only runs at 3 in the afternoon, but maybe it's something you don't want to deal with. But I think people don't do that enough. They don't spend enough time doing the research. But I think getting pre-qualified is probably the most important thing. And I guess for first-time buyers to understand that this is not a pass-fail process. A lot of times people will call me, they'll say, hey, I want to get pre-qualified, we'll set an appointment, then they'll call me a couple days later and go, well, we're going to wait, we're not ready. And I'm like, how do you know you're not ready? We haven't even talked yet. I'm the guy that's going to say whether or not you're ready.
Right.
Because they think, well, I wanted to pay down this credit card so my score's a little higher. And for me, it's like, that may not even make a difference. Like 680 to 700 on this program doesn't matter, so maybe meet with that person, take that first step and meet with somebody. But I think it's important to understand it's not a pass-fail system. Like if you go through underwriting and you're not ready, it's not like coming back the second time, somehow they're going to be more strict or judge you in some kind of a way because you didn't get through the first time. We're going to help structure how to get you there. We're going to build a roadmap on how to get you there. So that's really important because I do see that a lot. I see a lot of first-time buyers dip a foot in the pool and say, okay, let's try, and then back out before they even get there because they're like, we just don't think we're ready yet.
Right. So, dealing with people's mortgages, I'm sure you faced a lot of challenges to get people some loans.
Oh, sure.
So can you briefly describe some of the more challenging situations that you've been able to overcome and help people?
Yeah. So credit's the big one, right? Credit a lot of times is, it's the hardest one too. So if somebody has challenged credit and maybe their score's not high enough to qualify, even if the guideline says a 620 credit score is all we need, it doesn't mean that the system is going to approve you at a 620 credit score. The system may not approve you until you're a 700 on some programs, right? So just meeting the criteria doesn't always mean the system will approve you because there are automated underwriting systems that all the agency loans go through. There's Freddie Mac system LP and then Fannie Mae system DU. One of those systems has to say yes for your conventional loans or FHA, VA. If they don't say yes, regardless of the criteria, now there might be some manual underwriting that we could do, but for the most part, credit's kind of the biggest hurdle for a lot of people.
Now, do you know people that do credit repair?
Sure. There's a lot of credit repair companies out there, yeah. Lenders themselves shouldn't really credit repair. There's a small amount of credit counseling, I think, that you could do, saying, hey, here's your score. Maybe you could open a secured credit card, but we're not licensed to credit counsel. So if you're going to go deep on that, you really should be talking to a credit repair agency. So the credit repair agencies will kind of help you challenge some of their derogatory credit, past collections, maybe help you settle some of those debts, and then help you build better scores. And I know that my clients over the years that have access credit repair have gotten into homes quicker than the ones that do it themselves.
Nice, that's good to know.
Because all the Google research in the world, I'm going to fix my own credit, it's still you, maybe as a debtor, writing a letter to a collection agency. They're going to know that you don't have a full scope of the FDCPA, the Fair Debt Collections Practices Act, right? They're going to know that you may know something, but you may not know everything. Credit repair agencies know those rules in and out. So when you have the credit repair agency sending the letter saying, I need proof of this debt, I know that you'll settle for 27%, like they're going to know some of the rules a little bit better than you. And I think for the fee, you may pay $100 a month or something like that. Don't quote me on that, but most states put a cap on how much they can charge. So if you're going to pay $100 a month for 4 or 5 months to get credit repair, if it gets you into a house sooner, I think it makes more sense.
Oh, absolutely. It does. The saying about, the best time to plant a tree was yesterday. The second best time to plant a tree is today.
Yeah.
And then it's one of the most challenging things as a real estate agent also is explaining to people that, the longer you wait, the more money that you're losing in home value. Because there is no perfect timing of the market.
No.
When interest rates come down, you increase the buying pool.
Increase the price.
Yeah, increases demand, it increases the price. So there's never going to be that perfect storm.
Especially right now, we have low inventory. This is still a sales job. We're still salesmen. So what you see online is always an attempt to sell something, and anybody would tell you different, like talk to the FTC or talk to some of the regulatory agencies. Everything you say in post is an attempt to create a sale and to create revenue. So you may see best case scenario. We see that a lot with people looking at online calculators for mortgage payments. Oh, I thought my payment was going to be like $500 less than that. Why is yours so much higher? It's like, well, ours is what it is. Like, where did you see this payment? Oh, I use the Zillow calculator. It's like, okay, well, that shows 20% down. You're not putting 20% down. You're going to have mortgage insurance. That one didn't show that. And it's giving you best case scenario on rates.
Right.
It's assuming top tier credit, best loan to value position. So the agents that I see and the lenders that I see posting interest rates on Facebook or Instagram, you don't see them posting it when they go up. That's the hard part. It's like you're only talking about the good part. You're not talking about the bad. And so I think it's misguiding a lot of people, and they're focusing too much on rate. If you can afford the payment today, I would say it's probably better to buy today than waiting.
Sure.
And if you're going to wait for the bottom, you're going to know the bottom when we're 12 months past. The bottom to me is always like a look back. You look back and go, okay, there was the bottom like 8 months ago, 9 months ago. If you got lucky enough to hit the bottom, that's great. It's like playing a slot machine. If you get lucky, you play slots enough, you get lucky enough, you get the big hit. I just had a friend, she's like, yeah, we won like 14 grand out at the casino. And I'm like, how much do you think you're in the hole? She's like, oh, way more than that. But it's still fun to celebrate the win.
Sure.
So that's the idea of social media. I think we celebrate these wins. Like they'll say, oh, rates have dropped. Now's the time to start looking. And then all my clients call like, I heard the rates went down. Can we look at 400 now? And I'm like, the rate went down 1/8%. Like you're in the same boat you were in.
Right.
Unfortunately, there's no more education phase. They know everything. They're ready. They don't want any guidance. They're going to tell you what program they're going to do and what they're going to get. That's a lot of the clients now.
Is that good or bad?
That's bad.
Only because, and I've kind of heard this before because my stepfather used to be a car salesman. Mm-hmm. And when Kelley Blue Book became available, online, people would go online and they would research the value of a car, and then they would have that price in their head when they go to negotiate.
Yeah.
So it made it a lot difficult for him to make a sale for that reason.
Sure. Yeah. And I think it's the same for us because there may be a program that's better than what you had in your head. And I think the mistrust is the hard part. If you say, hey, look, what about this? And maybe that buyer thinks, oh, well, you just want to put me in that program because you make more money. Mortgage lending, I wish more people did homebuyer education, did the first-time buyer classes, not because they have to, just to use the program, because they actually want to learn. a little bit about it and figure that out. And I'm all for collaboration with clients. You know, if they come in with knowledge, that's great. But if they come in with knowledge and they don't want to hear anything but the path they're thinking, that's where it gets hard sometimes. Because it's still my job to kind of present to you what would be best. Really hard to build that rapport and that trust online.
Right.
I try and do Zoom meetings as much as I can when online's better suited for them, so at least we can go face to face and try and build that trust, because it's like I want to help you and I want to give you good guidance, and if we never build a rapport, we'll never have that relationship. Like you may second guess everything I say. So I think the education is a big part of it, and I think everybody going online, we miss that opportunity to sit down, build rapport, actually do an interview, talk to somebody and ask the questions we need to ask. Because now I'm digging through an online application that's maybe half filled out, and I don't know when you had this job, or you didn't mark married, you know, are you married? Because sometimes you have people with the same last name, but they're not legally married. So you just can't make those assumptions. And it's a whole lot easier to do that in person. Because if I ask a question like, you know, do you have any delinquency in any federal debt? You may mark no on an online application after thinking about it and going, well, do I technically, I don't really know if I'm delinquent on that. That would have been something we could have powwowed about, because I could have saw the look on your face when I asked that question. Right. And then gone, okay, wait a minute. Let's talk about this, because it seems like there's something there. Let's have a conversation. When they go online, we don't have those conversations. And something like a tax lien isn't going to show up on your credit. It's not going to show up until title, you know, and now it's like you're under contract and the title company comes back and they run the general index and they're like, hey, you have a tax lien, you know, and everybody's going to go, how come you didn't know about that? It's like, they didn't tell me. You know, they answered the question online that they didn't have any delinquent federal debt. Turns out they do. You know, it could be student loans. You know, we'll see that on a credit report though. But yeah, there's lots of stuff that just works out a little bit better if we can get face to face, or at least on a Zoom meeting or over the phone, and I can actually do that interview and ask those questions. I think that's important. It makes my life easier too, because I'm not trying to, you know, figure out what you were trying to say on the application or do. Right. Yeah.
Oh, awesome.
Yeah. So that's important.
I appreciate your time and the information. And is there anything that you wanted to add or any questions for me?
I think as far as adding on the lending side, but for you, how do you see the real estate market for you now? I know that people really aren't moving unless they have to. You know, but are you seeing people coming back out of the woodwork a little bit, especially going into winter? You would think more people would be looking at an opportunity to actually buy now, because sellers may come down on their price a bit. Sellers may pay closing costs. And I'm wondering why people aren't jumping all over that.
Yeah, I don't know. I mean, I think a big part of it is just, well, one, fear. It's not really understanding the market. You know, for a while, everybody was, you know, worried about the election, you know, and they want to make a decision after the election. And I'm not saying that that's going to sway their decision one way or the other, but now I'm kind of expecting some other kind of hang up, you know, so.
Yeah, the excuse train.
Yeah, you know, so I think it's just a personal fear of the unknown, you know, so I think it's good to have, one, it's good to have an agent that's going to educate them and help guide them along the way. And that's kind of been my approach getting into real estate, you know, is like, I want to help people.
Yeah. And
now I'm kind of learning more that it's not just objection handling so much as it's, you know, I have to kind of put myself in their situation and fight for getting them a deal. You know, like, okay, well, what's really the hang up here? Is it, you know, is it the financing? Is it the credit score? Is it, you know, not being able to qualify for, you know, like the house yesterday that I kind of was going over with the VA loan, you know. So now, you know, I could have just said, hey, you know, you can't buy that house because of the VA loan, won't qualify for that, and just left it at that and let them figure out, you know, what their next move is.
Yeah.
But now I'm kind of taking the initiative and saying, well, hey, look, I've done some research in the area. These homes qualify for a VA loan. This is the price range that we're looking at. And then this morning, he sends me a text and, let me know, hey, look, we're looking for something that's around Fairfield, and I work in downtown Spokane, so we kind of want to stay in this area, but you got the price point right. And, they weren't really necessarily looking for acreage, but they're looking for a place that they can just have their dog, run free in a backyard. So now it's like, okay, yeah. So like I said, I have to kind of like push myself forward and help push them forward.
And to be fair on that house, there really is not a lot of loans that would do a 1972 manufactured home.
Right.
Like conventional won't do that either, Fannie or Freddie. So the products are definitely limited for that home. It was great chatting, man.
Yeah, thanks for having me. I appreciate all the info.
Always. And then let everybody know how they can find you too. Website, email. What's the best place to get a hold of you?
Yeah, so I'm here locally with Haven Real Estate Group / Epic Realty. Haven Real Estate Group, they are a local like mom pop kind of boutique brokerage, and they do have an office in Coeur d'Alene also. So I'm licensed in both states, Washington and Idaho. You can contact me at jeff@northwestliving-spaces.com. That's NORTHWESTLIVING. My future goal is to network with a lot of people here in the community.
Yeah, that's good because we're helping build communities. That's what we're here for.
That's what I'm definitely learning with real estate. It's not just about selling houses. It's really about getting involved in your community and networking and making people's dreams and lives better.
We are here to help. So really appreciate the time, and anything else that comes up in the future, we'll sit down and powwow about it. Looking forward to it.
Awesome. Thank you very much.
Okay. Thanks, Jeff.